Late-day news of potential tariffs on aluminum and steel are rattling markets and further slowing the recovery of our loonie. Those trends are raising a lot of questions about how we should be looking to protect our money. So here to help us navigate some of those challenges is financial commentator Pattie Lovett-Reid. Pattie, good morning.
Good morning. Hi, Anne-Marie.
So the loonie has been hovering around a 5-year low since December, and that has implications, well, on everything from prices that we see in store to purchasing power abroad to investments that people have in the markets. How can we stretch that dollar further when it feels like it's shrinking?
Well, you're right, a 5-year low, and the tariffs are definitely a big wild card right now. But we have to sort of deal with the cards that we have, and the dollar is just below 70 cents US. I know a lot of individuals are saying the staycation is the way to go because their money simply won't go as far if you travel to destinations that are in US currency. But that's not all. You know, you can be frustrated, you can be angry with the US, and I am all of the above. But I will tell you that many investors are saying it still makes sense to have US stocks. It still makes sense to have international stocks. It makes sense to diversify to multinational countries. If you have let's say you have expenses in US dollars, because there are many people that still own US properties, for example. You know, if it does tick above 70 cents, even a marginal amount, it makes sense to convert it. I do think it's a day by day thing right now because it is a moving target, these tariffs. And so I'm trying, and it's difficult even for me to say I'm going to strip the emotion out of all of my investment decisions.
Yeah, let's talk about investments. And it's curious to hear that it's even worrying for you. When tariffs are introduced, or even when they're threatened, because they haven't officially landed yet, the market response we know is volatile. So with people, for people who have money that they have invested, what should they be doing with it?
Well, you know, that is an interesting point because I have been speaking to institutional fund managers, and they're saying we have a wish list that when multinational companies that have free cash flow, and they are around the globe, including in the US, they will say, we want to buy when the markets sell off because we buy, we wait, we have patience, we have discipline, and we have a longer term perspective. And the belief is, yes, when you're invested in the stock market, you're going to have events like this that create instability. And it's called capitulation, Anne-Marie. This is when the little guy, me, throws in the towel and says, I am going to go to the sidelines because I can't take it anymore. And the institutional investors go, this is the buying opportunity we've been waiting for. So if you have a balanced portfolio, you have a reasonable time horizon and tolerance for risk, you want to do something when the best course of action might be to do nothing. And that's what we're doing in our portfolio. I feel we're balanced. I feel we'll get through this. And it's steady as she goes.
But as you say, it's hard to strip the emotion out of it and to stick to those decisions when you see so much uncertainty. We have 4 years of this administration ahead of time. We are not even 4 weeks into it, and already there's so much volatility. I know you can't tell us where to invest money, but what should people be thinking about?
Okay, a couple of things. I mean, we are a resource-rich country. You could have some gold, commodities, mining stocks. Think about being balanced. I would also add to this, you know, rates may go higher because tariffs can be inflationary, but rates still may go lower. And if rates go lower, with 60% of mortgages coming up for renewal, I'm going to say it, I think the variable rate is back in vogue because you've got to look at the best and the biggest bang for your household right now. And if rates go from 3% because the economy slows to 2.75, the bank rate may be 2.5, then build up your best vantage point, improve your credit score, make sure that you negotiate for the best deal you can. Income stability helps, debt stability helps. Use a mortgage broker. Had to get that in because they're your ally right now.
Oh, Pattie, I appreciate any and all advice that you can offer us, especially in these times of great uncertainty with the things that matter most to us, which is our money. Great to talk to you, Pattie.
Thanks a lot. Thank you.
If you liked that video, make sure to subscribe to the Your Morning YouTube feed where you can find all kinds of new content posted every weekday morning.